This company used to give its product away for free. IT professionals loved it. They built entire workflows around it. Then it went from free to $50 a year, then to $200. GoToMyPC went from $203 to $1,260 per year. LogMeIn Central users documented 50 to 200% annual increases. One user documented going from $0 to $2,000 a year. They stayed, because switching costs are real and the tool still worked. This is GoTo. It used to be called LogMeIn. The same private equity firm that later owned LastPass paid $4.3 billion for it in 2020. Then in January 2023, GoTo disclosed that encrypted backups from 5 of its products had been stolen, along with a possible encryption key, through the same shared cloud storage environment used to access LastPass. 2 brands, 1 attack chain, 1 PE owner. GoTo is the quietest story in this series. No FTC enforcement action, no vaults from 25 million users stolen. What there is instead is a decade of trust destroyed gradually, contract by contract, price increase by price increase. The company begins in 2003 as 3AM Labs, a Hungarian-born startup. It renames to LogMeIn in 2006 and lists on Nasdaq in July 2009. The early product is reliable remote access with a generous free tier that makes it the default choice for IT professionals supporting users at a distance. This is the version people remember. The free product is eventually discontinued, but the brand loyalty built in this era carries through the acquisitions that follow. October 2015, LogMeIn acquires LastPass for $110 million, extending into identity and password management. LastPass continues as a semi-independent brand. This acquisition is the one that will define the company's legacy, not for the price, but because the cloud infrastructure they share becomes the entry point for the breach of 2022. July 26, 2016, LogMeIn announces a merger with Citrix's entire GoTo business in a $1.8 billion reverse Morris Trust transaction. The deal closes January 31st, 2017. LogMeIn immediately becomes one of the world's top 10 public SaaS companies, with GoToMeeting, GoToWebinar, GoToTraining, and Grasshopper now in its portfolio, alongside the GoTo brand that will eventually replace its own name. The combined company has over 2 million customers and annual revenue exceeding $1 billion. December 17th, 2019. Francisco Partners and Evergreen Coast Capital, an affiliate of Elliott Management, announced they will take LogMeIn private for $86.05 per share, approximately $4.3 billion. These are the same PE firms that through the subsequent LastPass spin-off will own the password manager that suffers the worst breach in password manager history. The deal closes August 2020. The price increase is documented across LogMeIn and GoTo products from 2017 to 2020 are the clearest expression of what happens to a product people love when it becomes a recurring revenue asset. GoToMyPC, $203 per year to $1,260. LogMeIn Central, 50 to 200% annual increases documented by Reddit users in r/MSP and r/sysadmin through 2018 and 2019. Individual users documenting journeys from free to $2,000 a year with no feature additions that justified the increases. The MSP community begins systematic migration to TeamViewer, AnyDesk, and Splashtop. These migrations are not driven by product failure. They are driven by a calculation that the price is no longer worth the trust. The price increases accelerated after the PE buyout, but did not begin with it. LogMeIn was already monetizing aggressively before Francisco Partners arrived. The PE acquisition made permanent what was already the direction of travel. December 14th, 2021, GoTo announces the LastPass spin-off. February 2022, LogMeIn rebrands to GoTo in a portfolio management decision that creates a dual brand structure, with GoTo covering communications products and LogMeIn revived for IT tools. The rebrand creates more complexity for customers rather than less. November 30th, 2022, GoTo and LastPass disclose a shared cloud storage breach. January 23rd, 2023, GoTo expands its disclosure. Encrypted backups were stolen from 5 products. Central, Pro, Join.me Hamachi, and remotely. Anywhere. A possible encryption key for part of that data may also have been taken. Stolen data includes usernames, salted and hashed passwords, multi-factor authentication settings, and product licensing information. The products unaffected: GoToMeeting, Webinar, Connect, Resolve, Assist, Training, Grasshopper. GoTo in 2026 runs a dual brand structure. GoTo covers communications, GoToMeeting for video conferencing at $12 to $16 per user per month, GoTo Webinar, GoTo Connect as a UCaaS and contact center platform, and GoTo Training. LogMeIn covers IT administration, LogMeIn Rescue for enterprise remote support, GoTo Central, LogMeIn Pro, and LogMeIn Hamachi for virtual private networking. Join.me's free tier has been discontinued. The most actively developed product is GoTo Connect, which received visible AI investment through 2025 and 2026, an AI receptionist feature, an admin Go pilot tool, AI-generated summaries, transcripts, sentiment analysis, and an omni-channel inbox covering voice, SMS, email, and social messaging. For SMBs and mid-market contact centers, GoTo Connect is a credible product that continues to evolve. The legacy IT portfolio tells a different story. GoTo Rescue competes with TeamViewer and AnyDesk in a market where the MSP community largely made its migration decisions years ago. The brand trust damaged by the pricing history has not been restored. GoTo Central and LogMeIn Pro maintain their user bases among customers with high switching costs rather than growing them. In January 2026, GoTo laid off approximately 4% of its workforce in a restructuring announced without a detailed public explanation. The company reports approximately $1 billion in annual revenue. The employee count is disputed. The company's About page states approximately 2,800. Independent third-party workforce estimates suggest approximately 1,144. Either figure represents a company substantially smaller than the old LogMeIn at its public company peak. The LastPass separation completed in May 2024. Francisco Partners and Evergreen remain the controlling shareholders with no disclosed exit timeline. GoTo is the correct choice for SMBs and mid-market organizations already invested in its communications stack, particularly GoTo Connect, where the product has genuine capability and active development. For new IT infrastructure decisions, where the starting point is a blank sheet, the MSP community's migration verdict is the relevant signal. TeamViewer, AnyDesk, and Splashtop are consistently named ahead of GoTo Rescue and Central in communities that evaluate these tools by merit rather than switching cost. The shared infrastructure concern from the January 2023 breach is specific and unresolved in the public record. Remote access data from Central, Pro, and Hamachi is some of the most sensitive in enterprise environments. The breach disclosed that GoTo and LastPass shared a cloud storage environment that customers had not been informed about. The possible theft of an encryption key alongside encrypted backups is a category of failure that goes beyond what the product's own security documentation would have led customers to expect. This series has examined 4 entities that together illustrate the same underlying dynamic at different intensities. Gen Digital built a data monetization business inside a privacy product and was regulated by the FTC into reform. Norton Password Manager demonstrates what happens when a security tool is adopted by default rather than by choice, and the company that owns it has a documented history of treating user data as a revenue stream. LastPass shows that zero-knowledge encryption is only as strong as the endpoint security of the humans who hold the keys, and that a single unpatched home media server can unlock the vaults of 25 million users. GoTo shows that when you turn a product people trusted into a recurring revenue asset, optimized for a PE exit, the trust leaves first, one contract at a time, long before the product stops working. GoTo is the legacy suite that kept customers, then kept raising the bill. The customers who remain are the ones whose switching costs exceed the cost of staying.